Good morning and welcome everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ in association with M Stock by Mirae Asset. And yes, today also there is no Santo with us at this point of time, but your old school guy is recovering from a bout of ill health, so he will be back with us soon. I can guarantee you that. Till then, you have to make do with me. So here I am talking for the Bulls and sometimes for the Bears as well. Now let's take a quick check of how the trade setup is at this point of time. It looks like the comeback of the Bulls that started yesterday is likely to sustain on the last street this morning. If you look at the Nifty futures on the SGX, they are indicating a positive start, possibly a gap up start as well on for the Nifty 50 in the local market. Wall Street also, the cues from there also overnight were quite good. Largely on the hopes that probably the Fed could start going easy on interest rates hike, as indications are that inflation might be peaking in that country. You could look at the US bond yields as well. They also slid in trade yesterday, clearly indicating that investors are not expecting the Fed to be as as aggressive as probably the expectations were earlier. Now, let's look at the macro picture at this point of time. The past 2 to 3 months narrative has all been about aggressive rate hikes, high inflation, possibly a recession in the US, a global economic slowdown. But at this point of time, it just seems the past 2 days trading has indicated that there might be some bit of relief coming into investors' psyche. And why do I say that? There are three reasons for that, right? You have oil prices on one hand. They have fallen quite steeply from about a high of $125 per barrel not so long ago to around 107, 105 barrels at this point of time. Inventories are building in the US, which is suggesting that probably demand is taking a little bit of a hit from high pump prices at this point of time. Plus, you have the entire concern around US recession, and therefore probably traders are starting to build in bets of slower demand going ahead. Now, falling prices, oil prices is good for inflation, right? It will ensure that probably inflation will start coming down later, and I think market is also looking at that sort of a scenario where inflation may have already peaked or is likely to peak in the coming months. Second, now with commodity prices, the way they are crashing at this point of time, Wall Street probably is betting that going ahead, the Fed may not have to raise interest rates as aggressively as has been projected so far. If you look at why the factors of inflation, there was the demand side of all of it, but the major reason for high inflation that we have seen over the past year has been driven by supply side issues as well as commodity prices. Now, with commodity prices crashing, there could be one less lever to drive inflation higher. Apart from that, clearly market now believes that Fed will probably start supporting it later. At this point of time, Fed has been all about inflation. At this point of time, they don't care so much about growth. In fact, their view is that growth could probably be resilient to take the interest rate hikes that they are projecting. But clearly, market does not buy that argument, and market feels that as recession inches closer, Fed will probably be forced to pause on the rate hikes and start maybe pondering about rate cuts in the next 12 to 24 months. So clearly, in short, markets' fears about inflation is edging lower, while at the same time they're expecting that while Fed had abandoned them in their fight for inflation, probably sooner or later Fed might be in their side. And I think clearly that is what is driving some of the relief rally that we are seeing. It'll be interesting to see whether it will sustain or not. You had Bill Ackman, the famous US hedge fund manager, suggesting that the market is totally interpreting the Fed's nuance and Fed's words and intentions wrongly. The US bond markets are totally underappreciating the threat that inflation poses and how sticky it could end up being. We have had a similar situation here in India as well, where there are, while there is optimism that inflation may start peaking later this year with good monsoons, food prices coming lower, but then there are also indications that this inflation, while it may soften a little bit, it could remain elevated for a long point of time. So clearly at this point of time, there are two schools of thought, and at this point of time, the dovish school of thought is probably has the heavy hand in the heavier hand or the bigger hand in the market than the bearish side. So that is the setup for you. Let's quickly now dive into some of the stocks that I felt could be in action in trade today. Starting off with we have Infosys. Well, why Infosys? Yesterday I was talking about two IT stocks, Coforge and HCL Tech, and today I'm back here with Infosys. Now, this is because Accenture, which is a global IT services company, a rival of Infosys, a big rival of Infosys, has actually come out with a stellar set of Q3 earnings. The earnings were much stronger than what the market was expecting, or analysts were expecting. Although they have moderated their view for 2022 a little bit. Of course, that was a gimme, given that we have had the US Ukraine-Russia war. There are higher interest rates, so clearly there would be some probably decline in spending. But overall, they seem quite buoyant and optimistic about IT services demand going ahead. And that is also the takeaway for a brokerage house like CLSA India. They are of the view that Indian players could also see similarly strong demand trends in the first quarter earnings or the June quarter earnings that is going to be reported in another month's time. Now, if you look at CLSA, you also have Nomura, which also said that, at this point of time, Infosys is their top pick in the sector if any sort of revival comes in, if investor sentiment also revives going ahead. And I think that, if you look at the sort of drawdown or the crash that Infosys has seen this year, I mean, 23% fall in a blue chip stock like Infosys doesn't come around every day. And clearly, given the sort of earnings that we are seeing from Accenture, if Infosys is able to replicate it in Q1 or Q2, clearly then this sort of valuation starts looking quite attractive, and probably a lot of investors will start thinking that the risk reward here is quite good for me to make money this year on Infosys. So clearly, one stock that you guys should probably watch out for. It might get a good leg up in today's session as well. The second stock on my list is it's a chemical name, Chemplast Sanmar. Now, like a lot of the chemical names out there, Chemplast has also come under a lot of pressure, largely due to concerns around margins. Now, there is an expectation that the company's Q2 earnings or the September quarter earnings could actually start seeing improvement on the margin front, because a lot of the input prices, a lot of the prices of the inputs that Chemplast uses have softened considerably over the past few weeks. So clearly that could be one tailwind for the September quarter earnings for the company. Apart from that, PVC, which is a key product for Chemplast, there the spreads are now coming in favor of Chemplast Sanmar. So another factor why earnings could start looking up in the coming quarters for Chemplast. And lastly, IFL Securities noted that the company has indicated that they're going to probably freeze any sort of capex or capital allocation plans over the next 2 to 3 quarters. Now, IFL believes that this measure, if it actually happens, and something that investors should be monitoring, if this happens, then this could result in a good upswing in the earnings of the company, especially the cash profits that the company would make, and that could result in a good re-rating in the stock, given the fact that we have already seen a considerable correction on the counter over the past 5 to 6 months. So clearly, another stock where you could probably look at some sort of a contrarian trade happening. Revival bets are taking place in Chemplast recently. There have been some bargain buying. It will be interesting to see whether that momentum sustains for the stock. Next up is, it's an old school stock. Yeah, I can understand probably you hearing this name from me would probably surprise a few. But look, I chase momentum. I'm an opportunistic person, so I'm clearly going to look for good opportunities. And GE Shipping, in my point of view, is looking like a very good opportunities. Now, this is probably the sole play on the global shipping industry that we can find in India. It's probably one of the only few companies with a good track record, good company, good management, and that can benefit from the upswing that we are seeing in global shipping rates. Now, if you look at what B&K Securities had to say, who initiated coverage on the stock, by the way, with a buy rating, they are saying that falling ship capacity globally, as well as surging orders, this is going to keep shipping rates quite high. I mean, we know the havoc that the sanctions on Russia has put the shipping industry in globally. There has been a lot of demand. A lot of tankers are actually floating on the ocean and have been caught up because they cannot unload or undock on ports. So clearly, a lot of shipping capacity at this point of time has used this, and at the same time, you have good global trade happening at this point of time. So clearly, shipping rates are likely to remain higher, and that could be an earnings boost for a company like GE Shipping. Apart from that, B&K expects about a 62% growth in profits of the company in just FY23 alone. So clearly, this is going to be a blowout year for GE Shipping in terms of earnings, and sooner or later that will have to reflect on the stock price as well. as I mentioned earlier, BNK has initiated coverage on the stock with a buy rating, and for them, the price target for the stock is about 550, which is a considerable upside if you look at from the current levels the stock is at. Moving on, before I move on, I also have to sort of, give you a little bit of what Santo probably would be thinking about the stocks. I know he has been sort of a little wary about global economic slowdown. He would probably counter that, CJ, at a time when people are worried about US recession, global economic slowdown, how can you be betting on an industry that is so closely aligned to it? There is a possibility, of course, that global trade could slow down going ahead. I mean, you could see the resolution of the Russia-Ukraine issue, and that could bring down shipping rates as well. But my argument to that would be that if you look at some of the biggest exporters out there, like a country like Korea, I mean, they have seen great export growth even in a quarter like March and in the months of April and May. So clearly, if a big country like Korea, a big exporter like Korea is not seeing any sort of slowdown in export demand at this point of time, you can take it as an indication that probably global trade is still on a very strong footing. And while markets may be worried about recession, at this point of time, traders at least are not. So clearly one stock that you guys should keep an eye on. The next stock on my list is Reliance Industries. Now, RIL did quite well. I mean, the entirety of April and May was a stellar 2 months for the stock, and probably one of the only lone players out there trying to get the market higher. But recently, this month, it has seen a little bit of profit booking from a lot of investors. There were concerns about the valuations of consumer tech companies. But if you look at what brokerages had to say, they are still quite bullish on the company and its earnings growth going ahead. They are of the point of view that the recent correction could be a good entry point for investors for RIL if you're looking for a stock that can probably outperform the market this year. Brokerages are basically convinced that the oil to chemical side of the business is the one that is going to drive the earnings for FY23 for the company. Clearly, refining margins globally are quite high, and they have actually improved even more in the June quarter from where they were in the March quarter. Singapore GRMs have surged in Q1. Clearly, that is going to be a tailwind for the refining business. And if you look at what Jefferies had to say, they believe that the oil to chemical business of RIL could see a sequential rise in EBITDA or operating profit of about 60%. So that is a huge jump that you could see in the earnings of RIL this quarter. And yeah, I mean, among most of the oil and gas stocks, analysts actually, RIL is still the top bet and is the preferred pick for a lot of investors. So clearly, there is a good ground for optimism for RIL, and probably the recent correction could be a good opportunity for a lot of investors to maybe bargain buy on this counter. Last stock on my list is a internet tech player which is also loss making. This is Sasta Sundar Ventures. Well, in my opinion, the stock is both Sasta as well as Sundar if you look at it from a longer term point of view. Clearly, the earnings momentum is there. The overall business fundamentals look quite sound, and at the same time, the stock has fallen 50% from its recent highs. So yes, a lot of battering from the investors, given just for the fact that it is an internet tech player. It is an internet company involved in e-pharmacy, e-retailing, and clearly that has taken a lot of the stock has taken a lot of beating because of that fact. But if you look at some of the fundamentals, Moneycontrol Pro recently had come out with earlier today actually has come out with a piece on the company, and they believe that the longer term outlook or growth outlook for the company is still very, very promising. They believe that the deal with Flipkart could change the fortunes of the company going ahead, and clearly will be a good boost for the earnings of the company. Apart from that, they're also expecting the margins also to see some sort of upside heading into FY24, FY25. So those next 2 years could be really good when you look at the earnings performance. Yes, it's a loss-making company at this point of time, so clearly that is something that works against it. But overall, the picture looks good, and at less than 1 times FY24 sales, this stock could be accumulated at this level. MC Pro feels like that. I know Santo will say that probably it's a loss-making company, so investors will stay away. To that, I will just say that डर के आगे जीत है दोस्तों. So probably take the plunge right now. That said, the market has opened, and as indicated, it has been a very, very solid start for the market. You have the Nifty rising about 0.9%. The advances and declines are also quite strong at this point of time. About 1457 stocks rising on the NSE, while around 239 stocks are on the lower side. The mid caps have taken a very strong start to the session as well, higher by about, the Nifty mid cap index is higher by about 1%. Let's just quickly look at some of the gainers on the Nifty 50 at this point of time. Clearly, Adani Ports is one stock that has gotten off to a good start, but ONGC surprisingly is the top gainer on the Nifty at this point of time, higher by 2.3%, which is sort of a surprise given that oil prices have been taking a beating recently. Apart from that, some of the, the next four gainers are banking names: IndusInd Bank, ICICI Bank, Axis Bank, SBI. So clearly, banking names are seeing some sort of bottom fishing as well at this point of time, higher by about 1.5 to 2% on trade. If you look at some of the losers for the day at this point of time, it's 1 second. Actually, there are no losers on the Nifty at this point of time. All 50 stocks are actually started off on a strong footing. So that is clearly a very, very good sign for the bulls, and long it may continue. That said, that's the wrap for the show today for Markets with Santo and CJ. Please post your feedback on the comment section below so that we can know what you want to hear and what you want to see. And also keep following us on the social media links that you can see at the bottom of your screen. Stay tuned to Moneycontrol.com and the Moneycontrol app for rest of your financial news, and I will catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.